Good morning, everybody. Post this here. Good morning, everybody. Yeah, let's post that. All right. Good morning, Jody. Okay. All right. Just wanted to mute this so you guys could hear me okay and see me okay. Now that we're live, let me screen share. That's what I got to do. I got to screen share. So there we go. Perfect. Now you guys could see me and hear me. L. Weiner, Ben, Jody, good morning. Good morning. Good morning. Good morning, everybody. I hope you guys are doing really well. And by the way, before we get started, just want to remind everybody that I'm going to have my trade room today at 11, and then I'm going to have another class. It's going to be a very, very cool class, and here are the links. You guys got to have the links for them. All right. Very, very important. Now, this is to do with my top projections. If you guys haven't seen my top projections for 2024 yet, this is going to be my last turning point class, and it's going to be on at noon today, right after VIP room. And remember, VIP room happens at 11 a.m. Now, let's talk about the market. So before we get there, I'm so glad I'm doing this live. I love doing this live. It's so much easier and so much more fun. I don't have to process it. Hey, Rodney, how are you? Good to see you here. Oh, I love it. Love it. Love it. Love it. I'm so glad that you're here visiting me. Folks, Rodney's one of our senior copywriters. This guy writes amazing copy. So if you ever been to one of our webinars, you probably heard and seen Rodney's work. He is amazing. So we're opening this morning just to give you a clue of what's going on. It's about 7:57. We're going to open up in about an hour and 33 minutes to be as specific as I can with you. And Happy New Year's to you too. Happy New Year's to you too. I don't know if you're in PV, but if you're in Ponte Vedra, I hope to see you this week. Anyways, so far overnight market hasn't done squat. We've had some pretty good overnight moves lately, but nothing as of right now. Good morning, Brian. Good to see you. So glad that you're here. By the way, this feed is about 8 seconds delayed. I didn't know that, but so you guys have an 8 second delay between me and what we're talking about live. So as you can see here, the Nasdaq's down about 10 points. The S&P is up about 5 points, and the Dow is up 97. Now, as I mentioned to you the other day, that this is we're in a very interesting position right now because the market's a little bit overbought, needs to cool off, but at the same time, you have a lot of liquidity up on top. Now, I warned you guys yesterday, this is the 200-day moving average, and this is the 20-year bond. Now, notice today, down 0.82. So we're already right here. As soon as we break this 200-day moving average, it's going to put a lot of bearish bias on the market because it's going to confirm the fact that market participants are starting to sniff the fact that the Fed may not be adjusting rates as early as March. Good morning, Ed. Good morning, Robert. So good to see everybody here. So much fun. It's so much fun doing this in front of live audience instead of just recording it every day. Just Robert, how are you? Matt, how are you? Good to see everybody. Good to see everybody. So please, 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 if you guys are watching the market today, you want to pay attention to the 20-year bond. It's already down a little bit. The question is it going to uptick after the market opens and tag the 8-day EMA, which is this red line right here? Or is it going to continue going down and breaking this level? If it continues breaking this level, we're going to be in deep, deep doo-doo. So now I don't expect much to happen before. The market's setting itself up right now. We have an ADP report and we have a jobless claim report. As of right now, the ADP has been horribly off. It hasn't been on at all, and it's reflecting the report we're going to get tomorrow. But it's been off. But it is a market moving report. We also have a jobless claim report. The Fed would like you to think this is a market moving report, and it usually is. But the fact is, we've been sitting right here in the low 200s now for 2 years, maybe a year and a half. It went up, it's kind of climbed up to about 290, and then it kind of came back. And by the way, if you guys have questions that you want me to cover something specific, I have my agenda, but if you want me to cover something specific, this is a perfect time to ask me to do it. And if it's kosher, I will love to do it. So let's talk a little bit about the Fed and yesterday's statement. I thought it was very interesting. And by the way, if you look at the QQQ, remember, I drew these lines for you guys several weeks ago. Just so you could see, we broke this first level of support and we're now edging towards the second one. If this level of support, now please listen carefully to what I'm saying. If this level of support right here becomes resistance, in other words, if we break through this level, we're going to be kissing the 50-day moving average, which is, I'll take a look at it, Tony, no problem, which is not going to be good for the market. But I am expecting the NASDAQ to touch this line here because we've had some major selling in the tech. Tech has not been holding on, and I'll confirm that once we look at the sectors in a few minutes. Before we do, I want to talk a little bit about news. Now, yesterday, something very interesting happened, and I thought it would have a much deeper impact than it did, and that's the Fed's minutes. Now, I've been extremely vocal. I mean, I've been like so vocal about the fact that I don't think the Fed is going. I've been calling them out on the fact that they're not going to lower rates in March. Well, they're saying the same thing, but the market just doesn't want to accept it. Now, I'll go through this, but yesterday, this number right here, this was before the announcement. This was at 82%. This is the odds of the Fed lowering rates in March. It was at 82%. After the announcement, it started going into the 60th percentile. And I'm expecting this number to go deeper. Now, but because listen to what they're saying. They're not saying we're going to lower rates in March. They're saying the opposite of that. But again, the market thinks it knows better. So just to briefly go through this, we've got the ADP report. We've got the Open Market Committee December 12th, 13 meeting where the Fed policymakers agreed that it would be appropriate to maintain a restrictive stance for some time. Does that sound like, folks, March is less than 3 months away? Right? It's like 2 months and 3 weeks away for some time. That doesn't sound like March. The committee expressed readiness to reduce the benchmark lending rate in 2024 if the trend persists, though timing for such move remained uncertain. I agree with that. I totally agree with that. Good morning, Terrence, Ben, Tony. I agree with all of that. What I don't agree with is the fact that they're ready to do it in March. I think that's silly. I think that's ridiculous, okay? Their baseline projection implies that a lower target rate for the federal rate would be appropriate by the end of 2024. Does that sound like March to you? Now, I believe it's going to happen in May, July, but I don't think it's going to happen in March, and neither does the Fed. So if this sentiment keeps going lower, now if it starts going to 40%, it went from 80 to 60%. If it keeps going lower, it's not going to be good. It's not going to be good. And I'll talk about crude oil, JB, in a few minutes too. Joel's jobs opening and unexpectedly fell to a 2.5-year low. Job openings lower is deflationary. Remember, when there's a lot of job openings, that's very inflationary. When job openings fall, it's deflationary, which is good for the economy. What's not good for the economy is the sentiment that's been driving the market higher, based on the fact that everybody and their mother thinks that interest rates are going to go down. And it's still 67%. Even after yesterday, it's still 67%. Honestly, if I heard this, I would make a bet that it's like 30% in March. But this is a major impediment, you see, because the market prices this in. And if this number keeps going down, the bond market, which is right here, is going to keep going down. And if the bond market's going up, down, that means interest rates are going higher, and that's very bad for technology. So there's a reason why I'm talking a lot about it. It's usually the markets are a lot more efficient than we're giving them credit for. I think this is a huge impediment to the market. And I want to see what the market, where the bond market is and where the NASDAQ is when this thing is at 30%. And that's where I'm expecting to see it in the next couple of weeks, or maybe in the next month or so. But these analysts, they are, Susie, they are on crack. Well, it's not just the Fed themselves. Usually the Fed is the one that starts spinning it, right? The Fed is not spinning it. We haven't talked about it yet. We haven't analyzed it yet. It'll happen in 2024. We don't know when. It may happen before the end of the year. That all sounds like it's going to happen down the line. But March, we're talking two announcements. It's just it seems a little it seems a little too soon. We're going to have the non-farm payroll today. Now, this is a market moving event, but it has not been accurate. The real one comes out tomorrow. So today you've got this, and it moves the market, but it's been off. It's been really, really off. Employment data is the real number. This is just a reflection. Some periods, it'll go 3, 4, 5 months, and it'll be dead on. But sometimes, especially when there's a changes occurring fast, you got to look at the real number. You've also got factory orders and ISM index tomorrow. Pretty important report. Tomorrow, we will not be day trading before 10 a.m., which we usually don't. Now, looking at the QQQ, as I mentioned, we look like we're going to break down right here, or at least kiss this area, which is 393.43. Not a great area to be in, but I do think we're going to be going down. As I pointed out yesterday, the Dow Jones is holding this area up very, very well so far. So far, look at this, which is telling us that markets aren't really going down. What we're seeing is a repositioning away from, let me show you. This is very telling. This is my short-term index, and you can follow this along. Look at the last 6 weeks. Look at that, 81 people here. I love it, love it, love it. Look at this, 6 weeks. Home builders, retail, real estate, Russell 2000. You can't get any more interest rate sensitive than this, right? You just can't. Look at it right now. Healthcare, utilities, consumer staples, energies. That's very, very inflationary right here. Very, very. And financials do fine when interest rates go higher. They don't do too bad. And again, blue chips. So things have changed a lot, and investors are definitely putting their money a lot more into defensive stocks. And I think that's going to continue. And that's a sign that not everything is hunky-dory. Now, I'll tell you something funny. Yesterday, for the VIP, for the trading pit, we shorted coin, and I think that's a great bet, and I'm still short coin. And it's a very volatile sucker. It's opening up here. But interestingly enough, right after I sold it, I saw an announcement this morning, actually, first thing. The Cathie Woods unloaded Tesla, that she unloaded, that she sold Coinbase. We're short Coinbase. She sold Coinbase, and she bought Tesla. Now, I don't know if you guys know this or not, but I think she's like the worst trader in the world. Had I known that, I probably would have done the opposite. I probably would have bought Coinbase and sold Tesla. A little joke in there, but boy, oh boy, I'll tell you, that Cathie Woods, she's horrible. So we're going to have a little bounce. We're definitely going to have some bounce in the cryptos, but look at this volatility from 187 to 145. You're going to have some volatility here. That's just expected, and that's our stop loss is closer to right here. But I just thought it was kind of funny that Cathie Woods decided to sell Coinbase and buy Tesla because she is awful. She sold Tesla right before it went up last time. All right, you guys wanted me to look at a couple of tickers for you. Walmart. Let's look at Walmart. Walmart is making its way above the moving average. It looks like this is a shakeout right here, a bear trap, as we like to call it. I like Walmart, but I want to see Walmart just a hair above this moving average. I want it like a hair. Notice it closed on the 100-day moving average. I want to see it above the moving average. So I like Walmart if it goes a little bit higher, okay? I like Walmart if it goes a little higher. A little higher, just a hair higher. And I would put my stop loss on Walmart. Let me show you where I would put my stop loss. I would put my stop loss right here below this bar at 157. All right. Look at that. People with tickers. I'll do a few, just a few. SLB, we got Schlumberger. Energies usually are moving higher when markets are in a dump. It looks like it wants to kiss the 200-day moving average. I wouldn't be buying it until it broke above the 54.65 level. Maybe a little bit more, a little bit higher than that. Crude oil. Let's look at crude oil. I want to look at crude oil. Actually, I want to take a look at crude oil myself selfishly. So crude oil. Let's look at let's look at March. March a little further here. Brian, ask me in a few minutes. Let me just go through this and I'll take a look. Yeah, crude oil is not ready for action yet. We're still below the 200-day moving average. We need to cross above the 200-day moving average. As a matter of fact, I probably would not be going aggressively long any energy stock till we're above the 200-day moving average. Couple of more for you. GDX, gold. Let's look at gold miners. Let's take a look at gold miners. Gold miners are very choppy. I'm expecting gold to do better. Look at this. It's got higher lows. That's a very good sign right here. Look, higher lows everywhere. Great sign. Want to see it break above the 200-day moving average. Folks, you typically want things to break above the 200-day moving average before you're buying them. Couple more. EN, EQNR. I don't even know what this is. Too spotty. Whatever this is, it's Equinor ADR, whatever it is, it's way too, look at this. You close here, you open here, it's too choppy. There's not enough fluidity in this market. I don't know if that's right. It's not fluid enough. I think I just created a brand new word, but it's not fluid enough. Let's look at Procter. Let's look at PG. Brian wanted to look at PG. Let's take a quick look. PG is down. It's below the 200-day moving average. I would wait on this one, Brian. This thing looks like it can start coming back down. If it starts coming up a little bit more, like to the 200-day moving average, I think I would dump it. But right here, it kissed the 50-day and backed away. I think what's going to happen is it's going to do this. I think it's going to come right back down right here. That's what my opinion is. And Apple, let's look at one more. And then I'll give you guys my roadmap for today. Apple is down, and I'm going to tell you, the reason I wanted to bring up Apple is not only is Apple down, but it got downgraded again. Right here, look. Apple fell pre-market after Piper Sandler downgraded it to neutral. Apple has huge market cap, okay? So be careful. That's not good for the Nasdaq. That's not good for the Nasdaq at all, okay? It's very bad for the Nasdaq and for the tech sector as a whole. Now, the game plan for today. Let me just go here. I'm going to use the E-mini for this because it's just easier for me to do this. So I'll just use the E-mini for this, which is up a little bit right now. If you use the SPY, you can transpose this to the SPY. It's very easy. But if you look at the E-mini, we're below the key moving averages here. And we're at support. If this support level breaks right here, you know what? I could just use the SPY. It's fine. I don't want to confuse you guys because most of you trade the SPY. Right here, we're at this level right here. Now, we can and we're below the key moving averages. Now, we can either bounce off this level, which is at 467.28, or we can take a big dump. If we take a big dump, the odds are we're going to go to this level. This is leading the QQQ. The QQQ is already down here, relatively speaking. But that's the level we need to test, 467, 466, 467. And then the next level is 460. If we bounce off this level, we can test the high again. Although with the sentiment that we're in right now, I find that extremely unlikely. I think we're going to go a little bit higher, right? Maybe up here to 473 and bounce back down. So we may have a little bit of a bounce, but I think that I think that every day less buyers come into this market, there's a lower chance, and they're losing confidence, and the probability of us going higher goes the other way. So right now, as far as I'm concerned, I am neutral right now. I'm not bearish. I'm not bullish. I'm a lot more neutral. I think there's a much better balance between buyers and sellers. But when the Nasdaq goes down, when the S&P goes down almost a full basis point, and in the morning it's up 0.11, it just doesn't convince me that there's a lot of coal in the fire. And you guys understand that if the market breaks down here, we've got these levels. Right here, we go into our first base. This is where we should end up when the market realizes that there's a really good chance that the Fed is not going to raise rates, lower rates in March. But I think we're eventually going to come down here. I don't think we're going to go higher. I think we're going to go lower. Also, we've got earnings, and the stocks have already appreciated ahead of earnings quite a bit. All right, you guys have the key levels. You have the key stocks. Before I let you guys go, if you haven't if you haven't seen my turning point, it's going to be happening today at 1 p.m. A lot of traders are having issues this year entering 2024 the right way. The markets are shaky at best, and soft landing this year, not so sure. I want you guys to come to my turning point event. It's going to be the last time I'm doing it. I'll talk about some new tickers. Here's the link. It's happening at noon today. And remember, VIP is at 11 a.m. Eastern time, not at noon. So it's going to be a very busy day. We got a lot of stuff going on. If you have any questions that I did not answer, you feel free to email me, roger@rogerscott.com. I look forward to doing this live every day. It's just so much more fun doing it live. I hope you guys had a great session, and I'll see you guys in the VIP room in a couple of hours. Bye. And Rodney, thank you for being here. Brian, thank you for being here. All of you guys, Kip, all of you guys, thank you for being here today. I really, really appreciate it. Bye, everyone.